Good morning traders, it's me Ali and I warmly welcome all of you in another forecast video of Euro US dollar and the precious metal gold. Guys, today is Friday and today is the last trading day of this particular week. Typically, the non-farm payroll comes out on every first Friday of a new month. But since the US markets are observing a holiday in the observance of Independence Day, the US banks will remain closed, which is why the US labor market or labor department decided to release their unemployment rate, labor market figures, non-farm employment change, and average hourly earnings. They decided to release it one day before, like they released it yesterday. And guys, the data was overall mixed because the jobless claims increased, the average hourly earnings fell down, the non-farm employment change increased, the unemployment rate fell down. Okay, let me tell you what is positive here. Two of the indicators are positive and two of the indicators are negative, which means that there is still uncertainty among investors about like what is going on in the US market. So with that being said, the overall movement in the market has been mixed, as you can see here. The precious metal gold, it is trading around, this is 1 hourly time frame, this is trading around, like it's showing a sideways movement. There's a very small territory where gold is trading right now. For example, on the higher side, the immediate resistance is staying around 1778 level, while the support is staying around 1773 level. Okay, here's the thing. Until and unless market breaks above this particular range, we are not going to see further direction in the market, because if this continues, then we can expect gold to continue trading in between this particular range, right? So as soon as gold comes out of this particular range, maybe we never know, maybe if it breaks on the higher side, then the next target level for gold is going to be 1786 level, while on the lower side, if gold manages to break below 1774 level, then the next target level for gold is going to be on the lower side, 1762 level. So guys, although the RSI, MACD are suggesting neutral bias, for example, as we can see, the RSI is tossing above and below 50 level, while the MACD is also holding above 0 level, which is suggesting a buying trend in the market. But we need to keep an eye on, the histograms. As you see, the histograms were getting stronger, stronger, and stronger. That was representing that there is a strong bullish bias among investors. But after that, they are forming weaker and weaker histograms. The green color is getting dim, and this shows that there is also going to be a bearish breakout on the moving averages here. So this shows that the overall sentiment of investors are, the bullish sentiment is getting weaker, and as you can see, the next histogram is it is trying to be negative. So which means that there is a probability that there is going to be a breakout, and there is a huge probability that if market manages to create candles below this level, then we can expect market to show us a selling trend in the market. So that's what we need to keep an eye on. This is what we can expect from the market if market manages to break below this level. While if market goes above the next level, we know what is going to be the next resistance level. Okay, speaking about the Euro USD, guys, Euro USD is also tossing, as you can see here. This is tossing above and below 0 level. Alongside, the RSI is also like consistently changing the direction. There is no one-sided movement in the market. As you can see, the market goes up, falls down to test the support level of 1.1190, which is a triple bottom support level. As we can see, market tested this bottom level for one time, and then again market tested the same support levels for the second time, and then again market tested the 1.1193 level once again for the third time. So this is working as a resistance level alongside Right now the market is again exhibiting the choppy sessions, and probably we can expect the continuation of a choppy session until and unless market shows us a clear breakout. And honestly, today I am not expecting any solid movement in the market because of the fact that we do not have any major or high impacted economic event coming out from any economy. And secondly, the US banks are likely to remain closed in the observance of Independence Day, so which is why we can expect market to show us a lack of volatility in the market and the lack of trading volume in the market. Anyways, like as soon as market breaks above 1.1250 trading level, which is this one here, on the higher side the next target for euro USD is going to be 1.1293 level, and then market can drop down, and then we can expect market to trade in between these trend lines. So likewise, on the lower side, if market manages to break below this level, then the next support level is going to be 1.1193 level, and on the higher side market can go upward again to test this level, and this is going to be the overall movement. But the thing is, I'm not expecting until and unless we have any sudden change in the fundamental, I'm not expecting a sharp bullish breakout which can lead the euro USD prices towards 1.1350. But in any case, if market breaks above this 1.1300 level, then the next target is going to be around, like, this is going to be the 50 pips, like from this particular level to this particular level. This is going to be somewhere around 50 pips, as you can see here. So overall trading range of the market is going to be like, we can expect market to play in between this particular range, which is of the 100 pips, which means that you can sell at the top and you can buy at the low, and you can place minimum 20 pips stop loss, and you can continue to play in within this particular range. So guys, that's pretty much it for today. Today is Friday, and like, I hope you will enjoy your weekend, and yeah, stay safe, and see you guys soon with the next update on Monday. Until then, take care of yourself and have a very profitable session. See you guys soon, guys.